Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. Ira Epstein, and here we are on Tuesday, the 4th of October, 2011. Just did a show a couple hours ago with Mark Leibovit of VRTrader.com. It's on our website. And I'm going to be doing one about a half hour with Barry Rosen of FortuneCast, two top market timers. Mark and I were talking today about the potential for a Tuesday reversal. Frankly, as you looked at this taping 5 minutes ago before I was taping, you were down in the S&P. Now you're back up, and the Dow is making a rather stellar late-day recovery. Will they hang on? Who knows? At best, it's a short covering rally, and it's rallying off the Bollinger Bands, as I so often try to teach you. You had a failure in gold today. I thought that when gold got over 1679.20 in the December contract, it might have tried to get up over that 1700, maybe to the 1730 level. Now, until you take out 1681.50, you've stalled the rally out. It doesn't mean it has to fall very much, but you've stalled the rally. Uncle Ben talked today, Ben Bernanke. He did not talk about more stimulus. He said it's not needed right now, but the Fed is not taking anything off the table. We're going to have to see what goes on. The bonds and the notes still having a fair rally on the day. Dollar getting close to unchanged, getting a bit more rally in the euro. And as you can see, you're down in the energy markets, you're down in the CRB. So let's go to the gold market and try to get a picture here because you're having what's called an outside day down. Let me explain that. You've taken out the most recent high, and you've taken out the most recent low yesterday's. And what else have you done? You closed lower on the day. Even though the market's still open, I know where the close was at 1:30 Eastern Time. So you're going to get a lower close out of the gold. In order to propel it back up on track, what do you think it has to do? Well, let me first explain this line. 1621.70 is where the gold market ended up at the end of July. That's the number I target 6 months going forward, guessing, and the word is an educated guess, that gold will be higher by the end of December. And you'll say, well, why do you do that? You know, it's a flip of a coin. It isn't a flip of a coin. In the past 10 years, only 1 year has it not done that, and that was 2008. And what happened then? Everything dumped. So is that going to be the case again? I'm not betting that is the case, but it could be. That's what you've got to be fearful of. Last night I wrote in my twice daily update, cash is king, and that's what's hurting the gold. And I'm going to repeat it. Cash is king. But you did get over 1679.20, and that means you have higher lows, 1585 versus 1535. You have higher highs. Today's high is higher than that high. But because you're going to have that reversal day down, an outside day down, until you get back up and take out 1681.50, the forces that are work are slightly biased to the downside. You'll have the 18-day average crashing down, and I want to use that word to you. It's going to come crashing down. It's going to cross, probably get near tonight, 1710 or so, and at the end of the week it'll be under the 1700 level. I think the 1679.20 to 1681.50 zone, let's call it the makings of a double top area. When that's taken out, we should get more interesting. Until then, if you take out 1585, there's nothing to stop the market, as I see it, from going back to 1535. The market is also continuing to battle at this dashed green line, and I've been mentioning this to you regularly. That's the 100-day average of closes. Gets over it one day, under it the next. It flip-flops back and forth. That number's up at 1642.80. I have no reason to think that that won't continue being the case in the short term as the 18-day comes crashing down to figure out, is the market going to force its way over that and then see 1760 resistance, or will this 18-day average start forcing prices lower as prices don't want to touch them? That's going to be the key. The market also got under the Bollinger Band when it went down to that 1535, got on the other side, fell to 1585, rallied back up. This type of chart pattern off a Bollinger Band, maybe chart pattern or indicator pattern is better grammar for that, that's not a usual one. You just take a look. You'll see that you don't see that too often. So what I'm thinking is the market's just going to chop around and bring the Bollinger Band bottoms and tops closer together, but I don't know if that'll come from a lower level. There's nothing yet bullish on this chart. That's the simple, hard, fast way to talk about it, except that 1621.70 or 1612.60 number now is still, to me, a very important level from an overall perspective. Is the market oversold? It is oversold. Is it close to doing what we call embedding, locking in the K and the D line the way it did it on the top side to force, in this case, the momentum up? In this case, if it got down, down? No. It is not close to embedding it whatsoever. It's just plain oversold. It's a disappointing day for the bulls. That's what I think. The silver market today, oversold, made a lower low today, getting to 28.66 than the previous low until 31.43 is taken out. What's the chart pattern? Lower highs, lower lows, Bollinger Band at 25.84, a potential profit objective. You're under the 18-day average. This system is still very bearish, and copper's bearish. Here's the thing that these markets did to make their situation more bearish. They flip-flopped both the copper back over the other side of the Bollinger Band as the silver did over the other side. Now they can easily fall down to them. So I don't see anything yet that's in the bull camp. The first thing you'll see is take out a previous rally high, and that negates the downtrend. You haven't done that yet. This is corn. And this is what can happen when a market tracks a Bollinger Band. It gets under and then flips itself over, just the way I'm talking about silver and copper, and can keep going down, hitting that. And the people that are buying this Bollinger Band going, the market's going to reverse. I know that's not what I've ever seen John Bollinger teach. I know it's not what I teach. It's one thing, the market gets ahead of itself to wait for it to get on the other side of the Bollinger Band and then keep pursuing it. And on the way down, that's just a sign of good strength. The more the market would go to the right away from the Bollinger Band, the eventuality that the trend is going to run out of momentum. The slow stochastic is measuring your momentum for you here, and it's what we call embedded. It's locked in. And as it's locked in, it keeps driving prices further and further down. Remember, this is a market that was just pushing $7.75 a bushel. Now you're down to $5.87 a bushel. There will be a number after a $2 break in this that we've gone too far, too fast. One of the things that I've written about in my newsletter was in the grain markets, I go, you're in harvest. Why would foreigners or why would anybody want to be buying if supply's coming to market? I'm not new to this business. I've done this 40 years. That's how long I've been in the futures business. And when you bring fresh supply to market, unless there's so much less fresh supply, supply is supply, and it adds to selling pressure. In this term, it's called harvest pressure, and that's what's going on. But like every market in the world, prices get too high and too low, and we will get too low off of this break, and you'll get a healthy bounce, and then you decide what you're doing. You're breaking down the crude the same way. Crude oil is now broken down, and it's gotten as low as $75. It's on the other side of the Bollinger Band. All systems are still bearish, but it's not an embedded stochastic like corn. It's just oversold. So the first sign of anything good in the stock market, and you'll probably get a pop in this market as well, since they go hand in hand. This is the live hog market. And I just got to show this. Here is a market fighting to stay over the Bollinger Band a bunch of days. And, you know, the one thing I'm going to tell you is I don't think it's going to. I think that you stay a few days and then you try to pull back under it. And that's just what's going on. You're overbought in your stochastics. I'm not bearish. I just think the market got ahead of itself. Look for a pullback and you play the game according from there. The dollar index. You can buy all you want over that Bollinger top. You know I'm going to wave to you and go, I don't think it's the right move. And here's the market finally reversing course, made the highest high of the whole move back up to 80.43. It has not got an embedded stochastic. The D line, which is the brown one, has got a reading of 79. It's not